if you really start to begin to see really, really good economic numbers. And the Fed has said very clearly, we want to see the hard data before we react. And if that data starts to come in a little fast and furious, no pun intended, then we can expect the Fed to live up to their statements and basically taper sooner. So if you started to see third quarter, end of second quarter numbers really begin to heat up on the economic front, you'll probably start seeing pricing come closer towards the end of 2022, early 2023 for the Fed to move than what people are pricing in at the moment.
Hey, Dave Wilson, the Biden budget calls for spending surge fueled by higher taxes. The Treasury sees Biden tax proposals raising $3.6 trillion over 10 years. These two headlines crossing in just the last 36 minutes. Not a big reaction from equity markets either. I mean, a lot of this was known.
Yeah, and it's going to take some time and some negotiation for things to happen. I mean, clearly there is a certain amount of concern in terms of what happens to corporate profit margins and all the rest as, you know, the potential for higher taxes looms larger. It's still a ways out, though, and a lot can happen between here and there. And for the moment, you're really left with a market, you know, where you can look at earnings growth. I mean, way better in the first quarter than analysts were anticipating, and more of the same, at least based on their projections coming in the second quarter and beyond. So, you know, as long as you have that going for the market, I mean, you know, they can deal with whatever is coming out of Washington at any given moment.
Vince, does it seem like to you that investors are skeptical that the Biden administration will be able to get its ambitions through?
Yeah, well, to the extent that they want to get their ambitions through. I mean, you know, all of this still has to go through Congress. Everybody has to sign off on it. You're going to see the back and forth go on as to, you know, realistically, what do the more conservative Democratic senators like Joe Manchin want to see in this budget. Most, I think, market participants are expecting that at best half of what Biden is looking for is going to go through. So it's not going to be as big a deficit projected spending proposal as the administration is putting out there. But at the same time, I think you have to realistically look at what is coming down the road, and what the bond market is totally ignoring at the moment is right. The inflation numbers we saw today. There is absolutely no guarantee that they are going to be transitory. And I think that's the biggest surprise markets are going to find towards the end of this year and into next.
Vince Signorella, global macro strategist at Bloomberg News. Dave Wilson, stocks editor at Bloomberg News. Thank you both for joining me. It's time for the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. Brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com. Today's number, 116 million. California is the latest to offer a vaccine lottery with $116.5 million in prizes available. Under the Vax for the Win campaign, residents 12 years or older who are at least partially vaccinated will be eligible for cash prizes. The first drawings on June 4th and June 11th will select 30 people to receive $50,000 apiece. In the final June 15th drawing, 10 residents will win $1.5 million each. Let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Hey, Tim. Senate Majority Leader Chuck Schumer is not hiding his outrage over Republicans blocking an independent review of the January 6th riot at the U.S. Capitol.
Shame on the Republican Party for trying to sweep the horrors of that day under the rug because they're afraid of Donald Trump.
Schumer says Republicans appear worried that the big lie around the election would be dispelled. Republicans accuse the Democrats of wanting the commission as a political weapon. Well, President Biden is seeking $6 trillion in spending in his first full budget proposal. That would be paired with significant tax increases on corporations and the wealthy. The Treasury Department says the tax hikes would bring in $3.6 trillion over the next decade. Infrastructure negotiations will continue well into the long Memorial Day weekend and into the coming week.
President Biden had hoped to come to a bipartisan agreement before the end of this week, but the Republicans' most recent counteroffer is still more than $1 trillion short of the president's plan. Senate Minority Leader Mitch McConnell had indicated the GOP could still go a little higher. President Biden will meet with Republicans next week to continue the talks, but warns the window for a deal will close soon. Republicans argue their proposal would still be the largest physical infrastructure bill ever enacted. In Washington, I'm Amy Morris, Bloomberg Radio.
The pandemic crushed the economy, but it was no match for CEO pay. The typical pay package for CEOs at S&P 500 companies hit $12.7 million. That's up 5%. Some CEOs took salary cuts, but other boards rejiggered performance targets to make it easier for them to earn bonuses. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, thanks so much for that, Nancy Lyons. It's Bloomberg Business Week. Tim Stenevec in the Interactive Broker Studios in New York. Joined now by Charlie Pellet. Charlie, another day, another headline about vaccine approval. This time, the Pfizer-BioNTech COVID shot cleared for children in Europe. European regulators saying today that they've cleared the Pfizer-BioNTech COVID vaccine for children who are aged 12 to 15. This prepares the way for mass inoculations of younger teenagers across the continent.
Indeed, another headline, another story that creates the feeling that things seem to be moving in the right direction here. Shares of BioNTech, I might add, the ADR is up now by 4.1%. Pfizer on the day up by 0.5%. It does give Europe, whose immunization campaign was initially fraught with difficulties, the first vaccine in its arsenal for younger adolescents, but certainly welcome news. The UK also adding to its arsenal today, clearing a vaccine from Johnson & Johnson, the first single-shot dose to be authorized in Britain against the disease.
Yeah, Charlie, we talk a lot about getting to 70% inoculation, 75%. The idea of herd immunity, we've heard from health experts, is not necessarily a concept that has a specific figure, but impossible to do that without authorization of these shots to people who are under the age of 16, under the age of 18, under the age of 21, the different stages in different countries that they become available for. And I still should note that there are so many people in the United States and all over the world who are under the age of 12, and this is not yet, a vaccine is not yet cleared for.
Indeed, and if I can just shift gears just for a moment too, and take you down to Brazil, just another story today involving vaccines. But our Bloomberg News story says Brazil let 70 million shots get away, sealing its COVID fate. Apparently, we had executives trying over and over and over from Pfizer, trying to get Brazilian health authorities to get those shots, but 70 million shots got away.
Yeah, and we all know how severe COVID has been in Brazil. 16 million cases, 450,000 lives lost. The severity has often been attributed to the President Bolsonaro, who still wades unvaccinated and maskless into crowds. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Are approaching a record as data signals prospects for a sustained rebound of the U.S. economy outweighs inflation worries. Treasuries rose, the dollar fluctuated, traders focused on the outlook for higher spending that could boost growth. S&P up 9, a gain of about 0.2%. The Dow up 98, up 0.3. NASDAQ up 45, a gain also of 0.3%. 10-year yield 1.59%. Gold is up 0.2%, $1,900 the ounce. West Texas Intermediate crude down 0.6%, 66.45 a barrel. Among some of those high-flying meme stocks today, AMC Entertainment, back on the plus side now, has been fluctuating wildly, up now by 3%. GameStop on the minus side, GameStop tumbling now by 7.4%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
It certainly is. Thank you so much, Charlie Pellet. Well, around the world, COVID cases topping 169 million, deaths exceeding 3.5 million. More than 1.78 billion doses of the vaccine have been given. And here, closer to home, at least for me, New York City passed a milestone in the outbreaks easing as the 7-day average for positive tests fell below 1% for the first time this year. Let's get into all that and more with Dr. Ian Lustbader, clinical professor of medicine at NYU Langone Medical Center. He joins us now on the phone from Long Island. Dr. Lustbader, good to talk to you today. How are you?
Tim, always a pleasure. Happy Friday, doing very well.
Happy Friday. I'm wondering how you're seeing this play out in your own experience at NYU. The 7-day average for positive tests falling below 1% for the first time this year.
Definitely a dramatic reduction in hospitalizations. There's still a few COVID beds at NYU, so it's not zero, but as you say, it's below 1%. And certainly the number of new cases and cases that need to be hospitalized are down dramatically. And, you know, we're seeing that in the United States, which is encouraging, cases coming down. And we have obviously a number of people who've had it and who've been immunized. So we're approaching herd immunity. You know, around the world, definitely, I don't think this is over yet by any stretch of the imagination.
Well, I'm wondering if you think we'll get to the point that the president has made a goal, 70% of U.S. adults having one shot by the 4th of July, and we're just over 60% at this point. That's a goal that he's put out. Are we going to make it?
You know, I hope so. I think so. We still have a small group, but a strong group of vaccine-hesitant people who've watch videos on YouTube and on the internet and are hesitant based on a variety of videos and other information they get. You know, we do try and reassure people. Nothing is 100% for sure. I can tell that we're certainly not going to get to 100% with vaccine-hesitant people, but I think we'll be in a much safer zone if we get to that 70%, and I think getting that by July 4th is reasonable, yes.
Yeah, the latest numbers from the CDC telling us that 62% of the population 18 years of age or older have received at least one dose of the vaccine. I'm wondering about how incentives can play into this. As you heard me mention earlier in the show, California is just the latest state to offer a vaccine lottery, $116.5 million in prizes available. This seems to be working, doesn't it?
You know, it is to a degree. I don't think this has been done before. I'm unaware of any vaccine incentives that we've done in the recent past that I can think of. But whether it's in New York State with free state university or city university tuition, you know, in a raffle or prize money, you know, it is a public health crisis, and I think it makes sense to do it. It's certainly going to capture many. I don't know if all the vaccine-hesitant people, but I think as long as it's a positive step forward, I support it.
I'm one of the tens of millions of people in the United States who this weekend will be traveling to visit family, and it will be the first time that I've seen my grandmother since March of last year. She's 98. Everybody's vaccinated. We're excited to all see each other. But I got to tell you, it feels like for me, because we're all vaccinated, that that things are going to be just like they were before the pandemic. And I'm not expecting us to do anything differently. Are we making a mistake by doing that?
No, I don't think so. And by the way, congratulations on good genes, having grandparents who are 98. Very impressive, I must say. So that's a positive. But I think the data, it really is reassuring in terms of being with vaccinated people in groups, even if you haven't seen them for a while. I think it is safe. Ideally, if you can sit outside, if the weather's nice, if you can, still keep that 6 feet apart, maybe a gentle hug, and then step back a little bit, just to be safe. But I think the data is very clear that staying together with vaccinated groups, indoors or outdoors, as the CDC said, is certainly fine to do. And even though we occasionally find a little bit of virus in the nasopharynx, with swabs like the Yankees, that we've talked about, I think it's going to be very safe. And I think the emotional positivity of being with family for your 98-year-old grandmother, to see her grandkids and family has such a positive energy that I think that far outweighs the very small risk of getting an infection.
Yeah, we're certainly excited about it. Our 2-year-old gets to see her for the first time, in more than half his life. Dr. Lustbader, if we were doing this interview 6-7 months ago, we'd be talking about a potential spike in cases following Thanksgiving or following Christmas, just in the last minute that we have, and we'll come back with you. Do you expect to see a similar spike in cases? Because they are down dramatically, but after this holiday weekend?
I don't think we're going to see as big a spike because of the widespread vaccinations. I think in the U.S. we're on a good trend. Globally, I'm not so sure at all that this is over. I think we're having underreporting of many cases from many countries. But I think we're good in the United States. I don't think we're going to see a meaningful spike after the holiday weekend. But certainly globally, it is by no means over.
All right. Well, we're going to come back to you in just a few minutes. Dr. Ian Lustbader, clinical professor of medicine at NYU Langone Medical Center. He joins us this afternoon on the phone from Long Island. As I mentioned, New York City has passed a milestone in the outbreak, easing as the 7-day average for positive tests have fallen below 1% for the first time this year. Also, European regulators have cleared Pfizer and BioNTech's vaccine for children ages 12 and up. We're going to talk about all that and more, plus the origins of the coronavirus in just a few minutes when Dr. Lustbader is back with us. Cases around the world, 169 million. Deaths exceeding 3.5 million, but more than 1.78 billion doses of the COVID vaccine have been given. This is Bloomberg Business Week, and this is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. I'm Tim Stenevec in the Interactive Brokers Studio in New York City. In just a few minutes, we're going to get back to Dr. Ian Lustbader, Clinical Professor of Medicine at NYU Langone's Medical Center. We're going to talk all about the latest with the virus, talking more about long haulers, what we know about these so-called COVID long haulers, as well as the origins of the coronavirus and how the discussion has changed in recent months. In the meantime, let's get a check on the trading day with Charlie Pellet.
Thank you very much. We're higher across the board. Let's begin with a headline from the Bloomberg Professional Service. Sources tell Bloomberg Rivian Automotive, that's the electric truck startup backed by Amazon, has selected underwriters for an IPO that could come this year. The company could seek about $70 billion in a potential IPO. Advisors include Goldman, JP Morgan, and Morgan Stanley. Stocks approaching a record, data signaling prospects for a sustained rebound of the U.S. economy is outweighing inflation worries today. Treasuries rose, the dollar is fluctuating. Right now we've got the 10-year yield 1.59%, 10-year up 3/30 seconds. S&P higher by 12, up 0.3%. The Dow up 112, up 0.3. NASDAQ up 56, a gain of 0.4%. Gold right now up 0.2% at $1,900 even the ounce. A retreat for crude. West Texas Intermediate crude down 0.7%, 66.37 a barrel on WTI. Bitcoin now down 6.1%, 36,142. CDC loosening its guidance for those attending U.S. summer camps, announcing today that fully vaccinated campers will no longer need to wear masks or practice social distancing for the upcoming camp season. Memorial Day weekend is upon us. If you're vaccinated and planning to be out and about, or perhaps off to visit grandma for the first time in a year, how secure should you feel about the risks of getting sick or spreading COVID? Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
So I don't want people to get a false sense of how low the infection rate is, because we're seeing a combination of vaccination and poor transmission conditions driving these low rates. Come the fall, we may see another surge of cases. Probably won't be as severe as they were last fall and winter, but we will see a surge of cases if we don't get more people vaccinated.
And he was interviewed this morning on Bloomberg Surveillance. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer shares among some of the biotechs we follow. Pfizer up 0.4%. Its German partner ADRs of BioNTech up 4.4%. AstraZeneca's ADRs down 0.2%. Moderna up 3.7%. Johnson & Johnson up 0.4%. I'm Charlie Pellet. This is a Bloomberg Business Flash.
Thank you so much for that, Charlie Pellet. Well, let's get right back to it with Dr. Ian Lustbader, clinical professor of medicine, Dr. Lustbader at NYU Langone Medical Center, joining us on the phone from Long Island. Dr. Lustbader, I want to get to the idea of COVID long haulers. It's something that we started to hear about a year ago, and those folks who've had lingering COVID symptoms. What do we know about how they can be treated now?
Well, it's definitely a challenge. We are seeing a subset of patients who really have these ongoing symptoms, ongoing chest pain, cough, shortness of breath, brain fog, heart issues. And we do know the virus affects every organ. In other words, we see myocarditis, cardiac inflammation, kidney, certainly lung, obviously we've had. Why most people resolve almost to normal and why other people have these ongoing symptoms isn't completely clear. There are a number of clinics. NYU recently has a new clinic for long haulers or post-COVID syndrome. It's not as if we have a magic pill, but we certainly are really trying to learn about this and follow those patients, kind of study the patients, try a variety of different approaches. There's some evidence that some of those patients, after they get vaccinated, even though they've had COVID, obviously, and they have long haul syndrome, post-COVID syndrome, if you give them a vaccine, a subset of those do get better. So that's still another motivation for people, even if they've had it to get the vaccine. But there's definitely an ongoing set. I've had patients for a year who have just felt terribly, even though they have the antibodies and even though they've gone through it and their family has gone through it and the family feels better, they do not. Very hard to tease out exactly what that is or the magic formula to make them better.
Yeah, I mean, I'm glad you mentioned the anecdotal evidence that we had seen earlier this year about those who had been vaccinated, the symptoms actually getting better. Do we have anything beyond anecdotal at this point?
There are no really formal studies. All of those studies are really being done, and there are a number of clinics that are being followed. And typically, it's a multi-specialty approach. In other words, we'll have pulmonologists involved, lung specialists, and neurologists involved. It's really a number of different specialties, and they're really analyzed. We try a number of approaches for symptomatic treatment and antiviral treatment and a host of different things, but there is not a consensus. Certainly, it would be interesting to look at some things like ivermectin that has been looked at for prevention and for treatment. I think we're going to have to explore some unusual or untried approaches, since this is basically new, and we're really trying to learn how to deal with it as best as can be. Fortunately, it's a small group of patients, but they are very intractable. Many are miserable, and many have difficulty really returning to work.
Yeah, the people who've been affected by it, I really feel for them. Dr. Lustbader, I want to end just talking about the origins of the coronavirus, because over the weekend there was a report in the Wall Street Journal that said 3 researchers from the Wuhan Institute of Virology in China were sick enough all the way back in November of 2019 that they went to the hospital. The Wall Street Journal cites an undisclosed U.S. intelligence report. And I'm wondering if you think that we are ever going to know, from a perspective of this medical community, the scientific community, where the virus came from.
I think it's really important to do our best to find out. I think there's mounting evidence that it really was a lab leak.
You do?
I do. I think transparency in science and medicine is what it's all about. You know, we go to other hospitals, we read papers, labs are visited to be reviewed and see whatever findings or scientific breakthroughs are found. It's a very open system, at least in the United States. And I think when you're prevented from doing that, it's very suspicious. And Senator Paul actually raised some good points about no intervening animal species being found. And I think we really trust scientists, and I think Dr. Fauci might have been too trusting in this case. We really need to keep a lot of research domestically and carefully monitored, because all of the labs in the United States are reviewed by central agencies to prevent this sort of thing.
Well, hopefully we get to a point where we actually can determine the origins. Dr. Lustbader, it's always great to chat with you. Have a great weekend. Thank you so much for joining us. That's Dr. Ian Lustbader, Clinical Professor of Medicine at NYU Langone's Medical Center. Let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Hey, Tim. 6 Republicans voted with Senate Democrats today to create an independent commission to review the riot on the U.S. Capitol, but that was not enough. Senate Majority Leader Chuck Schumer had a message for his Republican colleagues.
What are you afraid of? The truth? Are you afraid that Donald Trump's big lie will be dispelled?
Republicans argued the commission was not needed. President Biden is releasing his $6 trillion budget that spends more at home and would make corporations and the wealthy pay more in taxes. Biden tells Congress in a letter it would fix the tax code and reward work instead of wealth. Microsoft says the Russian hackers behind the SolarWinds campaign are at it again.
The software giant says about 3,000 email accounts have been breached at more than 150 federal agencies, think tanks, and non-government organizations. In a blog post, Microsoft Vice President Tom Burt said the hackers breached a digital marketing service used by the U.S. Agency for International Development called Constant Contact. He says the hackers sent phishing emails claiming former President Donald Trump had published new documents on election fraud and invited them to click the link. In Washington, I'm Nathan Hager, Bloomberg Radio.
Samuel E. Wright has died. You may not know the name, but you likely know his voice.
Under the sea, under the sea.
That's right, voicing Sebastian the Crab in Disney's Little Mermaid. Wright's family says he died earlier this week after a 3-year bout with prostate cancer. He was 74. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thanks so much for that, Nancy. Tim Stenevec in the Interactive Brokers Studios in New York, joined by Charlie Pellet. Charlie, I'm wondering what you specifically have noticed over the last few weeks as more and more people have been vaccinated and the city has started to open up. What's different than what happened over the last year?
Our traffic reporter has a lot more to talk about, hearing about those 1-hour delays at the George Washington Bridge. That's what's changed. It seems like every time we get a traffic report, I hear them say that it's the worst in a year. So that's clearly one thing that's changed. But also now we have lines. Now we've got more people around, and the city is obviously a whole lot busier. But look, not just here in New York, Tim. For our listeners across the country, they're seeing it too in their communities all across America.
They really are. I mean, if we think back to March or April of last year, and the way that during that 2 weeks to slow the spread, the way that cities across the United States shut down. I did end up going into work a few of those days, Charlie, and I'd never, ever seen New York City like that, and I hope I never see it again. But as a story in the Wall Street Journal today points out, there are some people who are somewhat longing for the idea of being not isolated, but not being in those crowds that are a part of the cities.
Yeah, well, New York, we've always had crowds, but that comes with the territory here. But you know what? There's something to be said for crowds, i.e., going to a Broadway show. By nature, it is packed in. Going to restaurants. By nature, you're close in New York. I've always said I like people. I don't hate crowds. I enjoy being around people, and I, for one, love the vitality that I'm beginning to see once again here in the city that I love so dearly.
Yeah, so I started to bike from work to from the office home, and I live in Brooklyn, and it's gotten increasingly crowded over the last few weeks. And riding now, Charlie, it does feel like the city is absolutely back to where it was before the pandemic.
That said, a week ago, took the subway home, had an entire car to myself, 6:30 rush hour.
Yeah, not quite there yet. All right, we got much more Business Week coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pelleton. Up Friday with the Dow, the S&P, and NASDAQ all advancing right now. Stocks, in fact, approaching a record as data signals prospects for a sustained rebound of the world's largest economy outweighs inflation worries. Traders are focused on the outlook for higher spending that could boost growth. Treasuries rose. The dollar's been fluctuating. 10-year yield now 1.59%. S&P up 13 to 4214, higher by 0.3%. The Dow up 120, up 0.4%. NASDAQ up 62, a gain there of 0.5%. So far this year, the Dow's up 13%. And as we move into the trading month of June, we've got the S&P up by 12.2%. Again, that 10-year yield, 1.59%. Bitcoin now down by 6%, 36,174. Gold up 0.3, 19.01 the ounce. A pullback for West Texas Intermediate crude, 66.40 a barrel, lower today by 0.7%. After earnings, Hewlett-Packard Inc. trading lower now by 8.3%. Dell is down 1%. Salesforce.com higher by 6%. Costco down 2.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, in April, the House of Representatives agreed to discuss the possibility of establishing a commission to study reparations. It happened more than 3 decades after the proposal was first introduced. President Biden called the resolution a good idea, but full reparations from the federal government probably won't be coming anytime soon. That said, the city of Evanston, Illinois is already getting started. Joining us today with an article it's a feature in the current issue of Bloomberg Businessweek magazine, available on newsstands and at Bloomberg.com/businessweek, is Joel Weber, editor at Bloomberg News, and Susan Burfield, projects and investigations reporter at Bloomberg Businessweek. They join us from Brooklyn. Joel, I'm wondering about this because reparations, or at least how Evanston is defining reparations, are a lot more complicated than just giving people money.
That's right, and I just thought this story that Susan and her colleague Jordan Holman worked on for the magazine was amazing and perfectly timed for this week and the events of this week. You know, here we are a year after George Floyd's murder, and I think the reparation story is one that has been one of the most interesting to watch. Illinois is particularly interesting because this is the first U.S. city to really promise that they would take this stuff on, and boy, that's not easy. It turns out even the word reparations can be controversial. So Susan, can you help us understand what Evanston is going through and where it might go from here?
Yeah, sure. So as you said, there's kind of 2 efforts underway throughout the country. There's an effort at the national level, at least to begin talking about a federal reparations program that would probably come to trillions of dollars for every eligible African American. And then there are cities like Evanston that are looking at what the local cases for reparations, for injustice, discrimination against Black residents that the cities themselves are responsible for, and that they can pay within their budget. So that's usually programs of millions of dollars. In the case of Evanston, $10 million.
And Susan, they're doing this through the lens of real estate. Explain why that is.
Yeah, so, for a city like Evanston, it's not going to attempt to make restitution for something as huge as the years of slavery. But what the city wants to take responsibility for and is holding itself accountable for is for housing discrimination that Black residents faced in Evanston for several decades that contributes, as we know, everywhere to a racial income gap of almost 7 times between Black and white families. And, in Evanston, it's pretty well documented the ways in which Black residents at one point lived all over the city, and then over the course of about 2 decades, were all steered toward one neighborhood in Evanston, now known as the 5th Ward.
And Susan, can you tell us more specifically about Evanston? Because the story that you write, and I should also add that this is episode of the Paycheck podcast as well. So there's a whole podcast version of this same story. I'd just like to understand, rewind the clock, because this goes back actually decades in Evanston. What happened?
Yeah, so, Evanston can document kind of the first arrival of Black residents to the late 1850s and 60s. And over the years, there were increased number of Black residents, especially the Great Migration of the 1920s. And as more Black residents settled in Evanston, there began kind of official and unofficial codes and restrictions on where they could live. And then there came redlining, which was a national policy, but also took place in Evanston, that further made it difficult for Black residents who now were all living in this one fairly concentrated area to get a fair mortgage. And that policy, plus underinvestment by the city, results in a neighborhood where the property values are lower than elsewhere in Evanston. The homes are worth less, and families were lost wealth. In one of the stories that we highlight of Carlos Sutton, his grandfather's home was actually moved from one part of Evanston to the Fifth Ward, and the home, had it been remained where it was, would today be worth maybe $500,000. Where it is now, it's worth about $150,000.
Not even that far away from where it was in the 1920s.
Right.
Susan, $10 million. That's the beginning. How are they paying for it?
So the money is coming from a new sales tax on the sale of recreational marijuana, legalized in Illinois at the start of 2020. Evanston has one dispensary, and the city is collecting a 3% sales tax, and estimates that sales will be about $1 million, the sales tax will be about $1 million a year, and they've dedicated the first $10 million of that to reparations. So it could be a 10-year program. If they raise more money through taxes sooner, they'll spend that, and they're trying to raise additional funds.
Susan, can you talk a little bit about just the word reparations and why it's getting pushback in just the last minute we have?
Sure. So I think that, there's a sense among some Black residents that reparations should really be reserved for the federal government's efforts to make up for, as best it can, compensate for and apologize for slavery and the discrimination that followed, and that every Black American, African American should be eligible. And the sense that a smaller program such as Evanston's, and especially this first step that just focuses on housing, is a bit too limited to be called reparations.
Susan Burfield, Projects and Investigations reporter at Bloomberg Business Week. It's a fantastic feature that you wrote along with Jordan Holman. Also joining me now, Joel Weber, editor at Bloomberg Business Week. A big thank you to both of you for joining us. You can find Susan's story featured in the new issue of Bloomberg Business Week magazine. It's available on newsstands and at bloomberg.com/businessweek. For those of you who are listening in New York, Washington, D.C., and San Francisco, or if you're watching us now on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. This is Bloomberg Business Week, and this is Bloomberg Radio. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Huff. We move into the final hour of trading, indeed the final hour of the trading month of May. We've got the Dow, the S&P, and NASDAQ all advancing right now, on track for a winning week for the S&P for the week. Looks like a gain this week of about 1.4%. Stocks are approaching a record as data signaling prospects for a sustained rebound of the U.S. economy outweighs inflation worries. Treasuries rose, the dollar fluctuated. Traders are focused on the outlook for higher spending that could boost growth, even after the personal consumption expenditures core price gauge posted the biggest increase since 2001. Megan Green is a senior fellow at the Harvard Kennedy School.
So I think the wages and salaries data suggests that we're not getting a wage spiral, and that makes sense given everything we know about worker power and how much it has decreased over the past couple of decades. So I think it would be really difficult to actually get a wage spiral now.
S&P up 12, a gain of 0.3%. The Dow up 119, up by 0.3%. NASDAQ Composite Index up 57 points, up 0.4%. The NASDAQ 100 Index up 0.6%. 10-year yield 1.59%. Gold up 0.3, 19.01 the ounce. And West Texas Intermediate crude down 0.6%, 66.44 a barrel. Tesla's Model 3 sedan has been stripped of its top pick status by Consumer Reports, which cited the temporary loss of automatic emergency braking and other safety features. Tesla shares, they're up 0.6%. And Boeing has halted deliveries of its 787 Dreamliner just 2 months after restarting them as the company works to get regulatory approval for its plan to resolve previously disclosed quality issues. Boeing shares down 1.4%. Recapping, S&P up 12, up 0.3. I'm Charlie Huff. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Bloomberg Business Week is brought to you by BNY Mellon's Pershing. Insight is a virtual and free, and it's beginning June 8th. Learn how Insight's content will leave you ready to lead effectively and think differently. Register now at bnymelloninsight.com. Well, it's been an absolutely wild month and wild week, particularly for cryptocurrencies and for meme stocks. Joining us now to help break it all down and make sense of it is Katie Greifeld. She's cross-asset reporter at Bloomberg News. She's also the co-anchor of Quick Take Stock. Happens each and every weekday at noon at bloomberg.com/QT. She anchors that along with me. Katie, we already had a show earlier today where we talked about some of this stuff, and I'm so glad I get to talk to you about it again because things have shifted a little bit, especially with AMC.
I know. It went, I think it was down to 9% lower at one point.
Yeah.
That's after it was up as much as 38%. Now it's basically unchanged on the day. So it's hard to keep track of the stock, but I will say even with today's back and forth, I think it's still up something like 130% on the week. So it's just nuts.
So why is this happening right now?
That's a great question. And I was just talking to Chris Murphy from Susquehanna about that because you are seeing so many call options come through on this stock. It's hitting another day of record call options. And usually that would have a sort of gamma hedging effect, a sort of bullish feedback loop. But he said, honestly, a lot of people who are in this stock right now, they're day traders. So a 3-day weekend is kind of like an eternity for them. So you might see some people just sort of, taking profit here, getting out of the stock because we're coming up on a holiday. We are.
Look, I've said it before, and I'm going to say it again, but I thought, I didn't think that GameStop was the end of this, what happened back in the earlier part of this year.
We all did.
But I thought that when the economy would open back up, when people would go back to work, when they perhaps wouldn't be spending as much time at home, that we wouldn't see the inflows into retail names and the activity around retail names that we saw in the winter and during lockdown.
Well, I think it's almost a question of psychology because I've definitely picked up hobbies during the pandemic that I plan to keep doing. So, stock trading for a lot of people, not even stock trading, crypto trading too, it's a source of adrenaline. It's a source of entertainment. And, we have seen some of the volumes come down. If you compare, the number of call options, for example, where we were in January and heading into the end of 2020 to now, that's come down a little bit. But I mean, you're right in that this resilience, it's really astounding, really.
Well, you've also been watching, apart from the equity shares of AMC, also AMC junk debt.
Yeah.
Yeah, take us into what you've noticed.
This, to me, is the most crazy part of the story, because when you think about bond traders, they're the people who are supposed to pay attention to the fundamentals. They're kind of, always pessimistic. And if you look at AMC bonds right now, I'm looking at a 2026 note. It has a 12% coupon. It's very much a junk bond. It's almost at par. It was as low as 5 cents on the dollar in November. Now it's somewhere around 97, 98 cents, which is incredible. You don't normally see moves like that. And this is still a company with a lot of problems. But it's interesting that this equity rally that you're seeing, you might actually see the company, or at least some of the investors in AMC would like to see them issue more shares and try to shave off some of their debt load. And you are seeing the debt rally, which is amazing.
Well, if we think about it from the equity perspective, we have in the Bloomberg, I can see that 0 analysts have a buy rating on the company's stock, 5 have a hold rating, and 4 have a sell rating on the company's stock. And it's just, the stock price is completely disconnected from the fundamentals right now.
Exactly.
I think that's what I should say. I think that's what a lot of analysts, I think a lot of analysts would say that.
Yeah, I mean, we heard from analysts from B. Riley this week. They downgraded the stock just on valuation alone. It wasn't even, based on any material change in the business, just that it has such an incredible rally. They can't justify raising their price target. But the fact that the stock just blew past that, just completely ignored it, it tells you that this is mostly retail. This isn't any sort of Wall Street phenomenon driving this.
Okay, I'm checking in right now on shares of GameStop, the original meme stock, down 9.3% right now. Is what's happening to AMC? Is it happening anywhere else to a slightly lesser extent?
You've kind of seen AMC break away from the pack here, which is really interesting. In January, it started with GameStop and it spread, and AMC was swept up in that. Now it seems like all the attention is focused on AMC in particular. You did see AMC and GameStop trading in lockstep earlier this week, but now it's all AMC. So maybe we're still in the early stages of this, and it'll look like January where you saw the broader meme universe rally, but really, I mean, all the action is in AMC right now.
One of the narratives that has emerged is that this is a short squeeze, similar to what we saw with GameStop back in earlier part of the year. But that's not necessarily the case, right?
It's hard to say. I mean, if you compare the short interest levels now, they're around 20%. That's much lower than it was back in January and February. So there's not too many shorts left to squeeze, although some people are advancing that argument. There's some people saying also that this is a gamma squeeze because you're getting so much call buying. Dealers have to hedge that when they sell calls by buying the underlying shares, which can sort of turn into a flywheel effect. But you're seeing that falter a little bit today. So it's really a moving target trying to pinpoint exactly what is going on mechanically here.
So is this how are we going to see this end? Because with the price having gone up this high in such a short time, there have been buyers. Obviously, there have been sellers. So who's left holding the bag? I
mean, we'll see, because Tim, I was right there with you. I thought this was going to be over in January, over in February. I mean, at some point, and I hate saying this, but the fundamentals should start to matter. I mean, with GameStop, even there, you did have a story that they're trying to revitalize their e-commerce business. With AMC, the story there is obviously the theater's going to open. We're going to go back to the movies. But AMC has so many problems to work through. I mean, eventually, some of that might catch up to the stock.
Well, as you point out in your recent newsletter, memes are forever. And it certainly seems like we're going to be talking about this moving forward. Better than diamonds. Katie Greifeld is cross-asset reporter at Bloomberg News. She's also the co-anchor of Quick Take Stock. It happens with me every day at noon on Bloomberg Quick Take, bloomberg.com/QT. She joins us live from the Bloomberg Interactive Broker Studio in New York. You can also follow her at K. Greifeld on Twitter. Let's get a check out the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Hey, Tim. President Biden is kicking off congressional spending negotiations today by submitting his full fiscal 2022 budget proposal.
The White House argument for the spending plan reflects the arguments for the president's economic proposals, as Bharat Ramamurthy of the Council of Economic Advisors indicated in a Bloomberg interview.
What the budget calls for is a series of investments in our infrastructure, in our families, and in 4 additional years of school, all of which are about improving and increasing the productive capacity of our economy over the long term.
The House Budget Committee, with a Democratic majority, will quickly begin work on a resolution endorsing the spending plan. But that's only the first step in a lengthy appropriations process. In Washington, Irv Chapman, Bloomberg Radio.
Senate Republicans have blocked the creation of a bipartisan panel to study the January 6th attack on the Capitol. The Senate vote fell short of the 60 needed. White House Deputy Press Secretary Karine Jean-Pierre says the president is not giving up on the idea.
He remains committed to that, and we will continue to work with Congress to find a path forward to ensure that happens.
Jean-Pierre says lawmakers failed today in their oath to support and defend the Constitution. It's going to be a busy weekend on the roads as many Americans head out for Memorial Day travel. The AAA is predicting a 60% rise in holiday travelers this year after many people were cooped up during the pandemic. And in another sign we are returning to normal, free samples will return to Costco members next month. The company says the rollout will start with around 170 locations across the country in the first week of June. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thanks so much for that, Nancy. Tim Stenevec in the Interactive Broker Studios in New York. I'm joined now by Charlie Pellet. Charlie, this is an absolutely wild story. Indeed. This is by our own Jonathan Browning. And it has to do with the cops who thought they were looking for a cannabis farm in the UK. Instead, they found a Bitcoin mine.
And there are so many interesting elements to this story. All of a sudden, there you are looking for a weed farm. Next thing you know, you've got computers all over the place mining Bitcoin. But let's be a little bit more specific. Happened in West Midlands, England. Police there ended up seizing 100 computer units that were working to bypass the local power grid. So it's not just about all of these computers, but it's the fact that they were then allegedly using power from the local grid that they had tapped into. The Bloomberg News story has a picture in this warehouse in Sandwell in the United Kingdom of all sorts of things plugged in and wires all over the place. But, mining Bitcoin, Tim, it takes an awful lot of energy, and you can up your profit margins if you don't have to pay for it by stealing from the local power grid.
You can. So for those of you who aren't familiar with how this works, it needs computers to solve complex math problems to create new coins. And it now uses 66 times more electricity than back in 2015. That's according to a recent report from Citigroup. The Center for Alternative Finance at the University of Cambridge estimates that it uses more electricity globally in a year than the entire Netherlands, Charlie.
And indeed, then this concern about the amount of energy that is used to mine for Bitcoin, the environmental factor, has been a major force in recent weeks in driving the ups and downs of Bitcoin. Bitcoin, by the way, down today by 5.7%. And just a related story out of Iran this past week, Iran banned the mining of cryptocurrencies like Bitcoin after a series of blackouts across major cities, the latest sign of growing unease over the digital assets' energy usage.
The ban is effective immediately, and it's going to last until September 22nd. It follows regional bans within the top Bitcoin mining country, China, and electric car maker Tesla's decision to stop selling cars using the token. Both cited environmental concerns. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
NASDAQ 100 index all moving higher. Let's find out what's going on as we head right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the green today in quiet trade. Dow's currently up 109 points. S&P's gain 11. NASDAQ rises by 44. The U.S. 10-year yield at 1.59%. Gold is up 5. And transports gain 20 points. Among the main 11 S&P sectors, real estate and technology led. Fractional losses in the industrials. And leaders to the upside in the Dow, Salesforce, and Amgen, while Boeing led to the downside. In other news, Janet Yellen backs the exploration of a central bank digital FX policy. And in deal news, Wellbuilt received a $3.3 billion bid from Italy's Ali Group. Wrapping things up, electric truck maker Rivian is set to select underwriters for its IPO. Live from the First Word Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, I thank you, Bill. Have a great long holiday weekend as you hear live breaking news over your Bloomberg Time Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Oh, thank you so much, Charlie Pellet. Well, if you've been paying any attention to what's been happening with cryptocurrencies, you know that volatility, at least of late, is the name of the game. And if you're keeping track right now, Bitcoin down another $2,300, $36,120. Joining us now to help us make sense of it all is Pat Levecchia, CEO of Oasis Pro Markets. Joining us now on the phone from Darien, Connecticut. Pat, it's great to have you back on a Bloomberg Business Week Radio. How you doing?
Doing great, Tim. Thank you for inviting me back.
So take me back to just a couple weeks ago when we got that tweet from Elon Musk, that first tweet that set off, I think, fair to say, this most recent round of volatility when it comes to cryptocurrencies. And he talked about the energy usage and Tesla no longer accepting Bitcoin for purchase of cars. What did you think to yourself?
Oh, boy, to start with. And then,
by the way, that's a normal reaction to an Elon Musk tweet.
That's right. That's right. We're on the same page there. Look, we're at the tip of the spear of this whole crypto progression. And in 10 years, digital will be ubiquitous technologies as well as crypto, in my opinion. Oh, and just in regards to, before I get started diving into, my views on certain items, I just want to share these are my views and not the views of Oasis Pro Markets.
Okay, important distinction. I do want to know about energy usage, though. I mean, this is now front and center. I mean, you probably heard me talking with Charlie Pellet about the illegal Bitcoin mine that was found in the UK, Iran banning Bitcoin mining until September 22nd because of energy usage concerns. How does cryptocurrency get to a place where it's not consuming as much energy?
Well, there's a lot of misconceptions about that, Tim, as well. There is energy usage, but I believe Kathy Wood has also shared that 50% of the mining activity right now is in China, most of that is supported by renewable and hydroelectric energy sources, just as an FYI. So that's on the Bitcoin front. On the ETH front, which is the second largest cryptocurrency out there, there are major improvements coming along over the summer, which is called the Berlin Fork, and then ETH Layer 2 by the end of the year. And just think about it this way. Today, it's a 4-lane highway for Ethereum, the Ethereum blockchain. When Layer 2 is implemented, now it's a bit controversial because it was supposed to have been implemented a couple of years ago, but they've been going through the auditing process and improving it because it's a community of basically coders who have put this all together. That 4-lane highway will be, just as an example, a 48-lane highway. And with that, there's much less electricity usage required. Now, with Elon's comments, he did come out about a week later and stated that he had spoken to the North American Bitcoin miners, and they had committed to publishing current and planned renewable usage as part of mining. So he started stepping back from that comment from 2 weeks ago. And I'm sure between us, he didn't expect the kind of reaction that it implemented.
I want to touch on regulation here too, and specifically get your thoughts on what we heard from bank executives yesterday and earlier this week. Jamie Dimon said to members of Congress when asked about cryptocurrency, it was a buyer beware product, and it goes back to how you run a business. He said, "quote, I don't smoke marijuana, but if you make it nationally legal, I'm not going to stop our people from banking it." What did you make of his comments around crypto?
Well, I think that he, the view is throughout my conversations with others in this particular space that regulation is coming through enforcement rather than, along the lines Gensler's asked for a market regulator. That probably won't happen this year or over the next couple of years. It may eventually step up, but in the meantime, through regulation of the U.S. securities laws. This is the Wild West, Tim.
Yeah.
And in the Wild West, it was an even wilder West a year ago, and it's, a lot of important players are coming into the market. So you've seen several major regulators from the Trump administration, like Brian Brooks and Brett Redfern, move over to crypto exchanges. Redfern was at the Securities and Exchange Commission. He ran one of the divisions there. He's now at Coinbase. Brian Brooks was the acting controller of the currency. He's now at Binance. And when you see the regulators making these types of moves, I think that, since they were on the inside, now they're on the outside, they do see the opportunities here in regards to not only obviously an opportunity for growth for themselves, but the opportunity for the United States, for the markets, et cetera. But regulation does need to come.
Well, what just in the last 30 seconds that we have, Pat, what does that regulation look like?
Fantastic question. I think the crypto exchanges are heading toward being regulated. I run a regulated exchange for digital securities. Right now, there's no regulation whatsoever in regards to bid-ask spreads, deliveries, et cetera. So it's buyer beware across the board. And once regulation comes, you'll see this market take off.
Okay, just 10 seconds left. Type of volatility that you expect.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenbeck in the Interactive Broker Studios in New York. Coming up in just a minute, it is that time of the day for the chart of the day, the song of the day, and the stock of the day with Dave Wilson. We're going to have that in just a minute. In the meantime, let's get a check on the trading day as we get to under a half hour remaining. Charlie Pellet, what's the latest?
Indeed, we are higher across the board, and not just 30 minutes remaining in today's session, but for the trading month of May, it will be on to June. Right now, we've got the S&P up 12 at 42.12. That is a gain of 0.3%. The Dow's up 120, higher by 0.4%. Nasdaq up 48 right now, higher by about 0.4%. Nasdaq 100 index up by 0.5%. On a retreat today for the Russell 2000, down 0.1%. Data signaling prospects for a sustained rebound of the U.S. economy is outweighing inflation worries. Treasuries rose. Right now, we have got the 10-year up 3.30 seconds. 10-year yield now is 1.59%. Gold up 0.3, 19.02 the ounce. West Texas Intermediate crude down 0.5%, 66.49 a barrel. Bottom line here, U.S. stocks, they're trading higher. S&P up 12 now, up 0.3%. Memorial Day weekend upon us. If you are vaccinated and planning to be out and about, how secure should you feel about the risks of getting sick or perhaps spreading COVID? Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
We've had some tremendous data coming out, especially over the last 4 to 5 months, that shows how good the vaccine is working at preventing severe disease, at preventing symptomatic disease, and even at preventing transmission. Now, nothing is 100%. And what I really worry about is the 40 to 50% of the population that isn't vaccinated right now.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. European regulators have cleared Pfizer and BioNTech's COVID-19 vaccine for children ages 12 and up, preparing the way for mass inoculations of younger teenagers across the continent. Checking some of the vaccine names, Pfizer up by 0.2% right now. Its German partner BioNTech up 3.9%. Those are the ADRs. AstraZeneca's ADRs down 0.2%. Moderna out of Cambridge up 3.3%. Johnson & Johnson up 0.4%. I'm Charlie Pellet. That is Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg. I don't know what it is, Dave, but I like it.
Really?
Yeah. I'm sorry to disappoint you.
It's okay. It's okay. It's only the biggest rock band ever.
So it is the Beatles?
Yes!
Okay. I was wondering if it was the Beatles.
Oh, yeah.
No,
now he says it.
I don't want to get that wrong.
Now he says it.
I don't want to get it wrong.
Absolutely. It's John Lennon on vocals. I mean, come on.
Yeah.
Anyway, it was a cover of an R&B song by a guy named Larry Williams.
Okay.
And they were big, the Beatles, on covers on their early albums, and a lot of them are as distinctive as their original songs were.
I'm just going to get destroyed, by the way, for not getting that. So, thank you. I got it. I kind of got it before you said, when you said biggest rock band of all time.
Yeah, pretty much. Pretty much.
I can hear John Lennon. Early stuff.
There you go. Anyhow, Slow Down. That's the song. And think about it. That's what stocks are kind of doing at this point, is slowing down. And it's not so unusual when you look at history. I mean, that's a lesson that the folks at LPL Financial taught us this week, specifically their strategist, Jeffrey Buchbinder and Ryan Dietrich, kind of looking back at bull market periods, going all the way back to the 1950s. They singled out 10 of them before the current bull market, and just looked at the performance of the S&P 500 index in the first year and then in the second. And when you run the numbers, and you can do it on the Bloomberg terminal, I certainly did, you find out that, in general, second year, not so lucrative. In first year, on average, for those 10 periods, gain of 39% for the S&P 500. Second year, more like 13%. And as the folks at LPL point out, you tend to get some volatility within the year. The chart also kind of plots out the current bull market, which, let me tell you, that first year gain was exceptional, to say the least, almost 75%. And since then, the S&P 500 has risen about 7%. Now, bear in mind, we are talking from the day of the low to current, and that's what they do all the way through. So in other words, you're looking from the low of March of last year, and then you go one year forward, and then you go the second year forward. So that's how the numbers come together. So basically, they're figuring, the gains are likely to slow, and there's likely to be more volatility. Maybe not a surprise, because that's what history shows us. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Okay, Dave, but here we are, not even halfway through the year. The S&P 500 is higher by more than 12%.
Yeah, and?
There's still more year to come?
Well,
I mean, yeah, it's not 70% or 75%, but it's nothing to shake a stick at.
No, absolutely, and maybe that's as much the point as anything, that if you're willing to hang in there, that you may well be rewarded for your patience, if nothing else. The idea of that second-year gain averaging almost 13%, it shows you what can happen. I mean, for a lot of people, that would be a very good year. It's just that it comes after a year when stocks take off, so people are kind of looking at the moves a little differently, perhaps.
Yeah, and it puts into context just how big of a rally we saw in such a short period of time last year.
Oh, absolutely. No question about that.
Give us a preview, Dave, of your stock of the day.
Absolutely. It's Caleres. This is a company that makes shoes and sells them. When I say makes shoes, brands like Naturalizer and Allen Edmonds, and they own the famous footwear chain of shoe stores. They came out with the fiscal first quarter results, one of the few companies today to do so. It wasn't about the quarterly results, it was about the estimates. Fiscal second quarter sales forecast coming up short of analyst projections in a Bloomberg survey, and the company kind of being punished for it. Was down as much as 14% at one point. I mean, it's kind of made up about half that loss, just lower by 7% at the moment. The ticker, by the way, for Caleres, CAL.
If you want to get more of Dave's Stock of the Day, it's happening at 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at The One Dave is where you can find Dave. Hey, Dave, it's the last day of the month.
It is.
So that means it's Spotify playlist time.
It is. And those very places you were just mentioning, right? Facebook, LinkedIn, and Twitter at The One Dave, it will be posted momentarily, as soon as I get out of the studio, basically.
So you're gonna update it today, even though it's not actually the last day of the month.
Well, it's the last trading day of the month, and that's what matters.
Okay, preview for Tuesday's chart. Are you already thinking about it?
Oh, yeah. I'm always thinking about it.
You got it ready?
Things. Yeah, okay. I do.
Well, we'll look forward to that one. Dave Wilson, stocks editor here at Bloomberg News. Have a great long holiday weekend. Let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Hey, Tim. Senate Republicans today blocked the creation of a bipartisan commission to investigate the January 6th attack on the Capitol. Only 6 Republicans voted with Democrats to move forward on the House-passed bill. Director for the Center for Politics at the University of Virginia, Larry Sabato, says the outcome of the vote was expected.
This went pretty much as people expected. It's been obvious ever since Minority Leader Mitch McConnell came out strongly against having a January 6th commission and went to his caucus members and asked them to do him a personal favor by voting no.
Sabato says today's vote is not going to help Republicans in 2022, especially among well-educated suburban women. Microsoft says the state-backed Russian cyber spies behind the SolarWinds hacking campaign were back this week, launching a targeted spear phishing assault on U.S. and foreign government agencies and think tanks. It says they gained access to an email marketing account of the U.S. Agency for International Development and then masqueraded as the government body. Microsoft did not say how many of the attempts may have led to successful intrusions. Actor Bill Cosby has been denied parole after refusing to participate in sex offender programs during his nearly 3 years in a state prison in Pennsylvania. The 83-year-old Cosby has long said he would serve the full 10-year sentence rather than acknowledge wrongdoing and take part in the programs. This is the first year he was eligible for parole under the 3 to 10-year sentence handed down in 2018. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, thanks for that, Nancy Lyons. It's Tim Stenovec in the Bloomberg Business Week, a radio show, Bloomberg Interactive Broker Studios. Our Business Weekend show features our interview with Chobani President and COO Peter McGinnis. In this excerpt, McGinnis discusses how the company looked after their employees as soon as the pandemic hit. Take a listen.
We set out very early to take care of our employees, keep them safe and supported. Safe was the first thing, and supported really was parallel and concurrent. And supported was child care subsidies and special bonuses and time off to get vaccinated. And it really created a healthy, happy, productive workforce. And so we didn't close a single day. We operated 24 hours a day, 7 days a week throughout the entire pandemic because the demand was there.
It's really remarkable to hear because over the last year, we've heard of some devastating stories from food processing plants throughout the United States where coronavirus outbreaks took the lives of so many employees. But you put measures in place early at the company, and as a result, there were no coronavirus outbreaks in your plant here in New York and South Edmonston, and neither in the one in Twin Falls, Idaho as well.
Correct. There was community spread.
Right.
But there was no plant outbreak or spread. And that was critical. And we jumped on this in mid-March, Tim, when it was unpopular, to be honest. I mean, let's have a frank conversation here. It was considered a downstate issue, if you go way back a year ago, March. And there was no cases upstate New York. There were no cases in Idaho. And we jumped on masks, and we cleaned every 2 hours in the factories, because remember back then they thought it was really spreadable on surfaces. And we were able to get temperature equipment when you couldn't find it. And this was all done second week of March.
That was Chobani President and COO Peter McGinnis. Peter McGinnis is featured along with many other people in our Business Week weekend show. You can hear more of that interview and our weekend show on Bloomberg Radio and on our podcast feed at Bloomberg.com. This is Bloomberg Radio, and this is Bloomberg Business Week.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We've got 13 minutes to go until that closing bell clangs on Wall Street. 13 minutes left in the trading month of May, with the Dow, the S&P, NASDAQ all advancing as data signaling prospects for a sustained rebound of the U.S. economy outweighs inflation worries. Treasuries rose. The dollar fluctuates. Right now, we've got the NASDAQ 100 index up by 0.4%. The Russell 2000, though, lower. The Russell 2000 down 0.2%. Right to the numbers. S&P up now by 10. That is a gain of about 0.3%. Dow up 114, up 0.3. NASDAQ up 38, higher by 0.3%. 10-year up 3/32. 10-year yield 1.59%. Gold up 0.4%. 19.03 the ounce. West Texas Intermediate crude lower now by 0.4%. 66.62 a barrel. Bitcoin now down by 7%. After earnings, Hewlett-Packard Inc. lower by 8.5%. Dell is down 0.7%. Salesforce, based in San Francisco, Salesforce up 5.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yes, indeed, it is, with just over 10 minutes until the last trading day of the month concludes. We are looking at gains across the board on the Dow, the S&P 500, and on the NASDAQ. Well, joining us now to help make sense of it all is John Trainer, Chief Investment Officer at People's United Advisors. It has $9 billion in assets under management. Joining us on the phone from Bridgeport, Connecticut. John, how are you doing on this last Friday before a nice 3-day weekend?
Hey, it's nice to see a nice rally in the market, so this is a great way to end the month and start the weekend.
Yeah, well, unfortunately for us on the East Coast, it seems like the weather's not going to be so great this weekend, which is a little disappointing, but, that's neither here nor there. Let's talk markets and really what you make of them right now. So here we are at the end of the month. The Dow higher by more than 2%, the S&P 500 higher by 0.7%, the NASDAQ finishing the month looks like down, at least as of right now, about 2%. What do you make of it all?
What we're seeing is just a continuation of the themes that we've seen all through this year, sort of the give and take, the ebb and flow between growth and value. Is the economy going to be too hot, or is it going to be, a more moderate growth? We have been in the camp that you want to, and we started doing this last year, build your portfolio for the economic rebound, start to decrease your growth emphasis, increase the value emphasis in the portfolio, because we definitely think we're going to continue to see good news on the economy, good news as the service industries start to reopen. So you want to position your portfolio there. And, I know it's tough with the daily ebb and flow, but keep your eyes focused on the rebounding economy and increase the cyclical exposure in your portfolios.
But to what extent is that priced in right now already?
Well, I think with regard to a lot of the sort of the deeper cyclicals, they've had a nice pop. You sort of had the bounce in a lot of the stocks that were given up for dead last year. But one of the things that we've been doing is continuing to take profits in the big techs. We're now slightly underweight. We were overweight last year, so we're underweight. I don't think we're to the end of that. I still think there's time to take profits in the tech. So I think some of this is factored in, but when you see a lot of the frothiness in the market, I'm not sure that a lot of investors have positioned their portfolios for the cyclical recovery. There's still a lot of sort of the big tech ownership out there that I still think needs to be rotated out of.
And what do they rotate into then, specifically?
Well, we like the financials. So we're buying, more of the mid-sized banks, which are more focused on the rebounding economy. The money center banks have done very well, but you want to own more of the mid-sized banks, and then the industrials. We like the industrials. We want to be exposed to that, and we're buying, some of the industrials that definitely did not fall that hard last year, that have good cash flow growth, and we want to be exposed to them. So financials and industrials are the two areas we're emphasizing.
Financials and industrials. Well, let's talk a little bit about the I word, inflation, and to what extent you believe, like the Federal Reserve and officials there, we hear over and over again that it's transitory.
Yeah, one of the things we do is we keep an eye on the bond market, and what the bond market is telling you is that they believe the Fed. Look at the inflation news that we've had recently here, and the bond market's really not reacting. So investors are giving the Fed the benefit of the doubt. One of the things that we do know, though, is we're probably going to get some surprises. We think we will get some surprises on the upside, meaning it's going to shock the market, and they'll think the Fed is behind the curve. Generally, when that happens, the value companies tend to do better in that kind of an environment. So again, that's another reason why you probably don't want to own a lot of the higher PE stocks. You want to cushion your portfolio with some of the value stocks. But we don't think inflation is going to get out of control, but we think we're going to get some scares coming forward, and it's going to shake the market a little bit. Maybe we'll see it in the bond market.
Well, what's the data? What's the data that you're watching about that? Is wage growth more important there? Is that where you're keeping an eye on when it comes to inflation?
You hit the nail on the head. I know our economic team keeps a very close eye on commodity inflation, but the inflation that we're most focused on, and again, we're going to get the employment numbers next week, so we're going to get some fresh data. But the wage inflation data is really what we're keeping our eye on. We've seen tremendous increases in the increase in the minimum wage. A lot of employers, a lot of local employers are struggling to hire people. That wage inflation, that if we see that start to pick up, that would tell us, oh boy, maybe we are getting some more sustainable inflation here, and that would really spook the market. So you hit the nail on the head. Wage inflation, much more so than commodity inflation, is important to us.
So if wage inflation is most important, what happens if you start to see significant wage inflation? What do you do to your portfolio?
Then we start to get a little bit more defensive because then, again, the Fed policy acts with a lag. And, if the Fed starts to get spooked, and if investors start to think the Fed is behind the curve, again, they're giving the Fed the benefit of the doubt now. If they believe the Fed is behind the curve, we certainly think we're going to see interest rates higher. So our portfolios right now, we're short duration, we're short the index. But, a concern that we've got would be with the overall market. So I think you could see a little bit of a pullback. If confidence in the Fed gets shaken, then I think you'd see a pullback in the financial markets across the board. And that would be something that, number one, we don't think is going to happen just yet, but we have to make some adjustments to portfolios.
Hey, John, I think one thing that is surprising to me is how time flies, and that the next jobs report is already coming next week, because it does feel like we just had that 266,000 number that was such a disappointment against what economists expected of 1 million in the most recent report. What are your expectations for next week? And do you think that, given that we are still not out of this pandemic, and given that kids are not back in school full time, we are going to see another disappointment?
No, actually, we actually think you're going to see the unemployment rate drop. Our forecast is to get down to 5.9%. So we actually think it's going to be a good number. I know a lot of people were very surprised last month that it was a relatively weak number. We think that's going to change. Just from anecdotally what we're seeing on the small business side, we think you're going to start to see the rehiring, and really it's that rehiring in the waiters and waitresses and the lower wage jobs. That's really what the Fed is looking for. So we think the Fed is going to see some rehiring next week, which would be encouraging. And we'll see how that impacts their tapering conversations.
So, John, just in the 20 seconds that we have left, does that change how you're thinking about potential wage growth if the jobs report does look good?
Yeah, if it looks good, and again, we're hoping it's a good number. We're hoping we see rehiring in the lower wage areas. 1 month is not going to shake us, but that's really what we want to see: rehiring in the low wage jobs.
We're going to have to leave it there. John Trainer's Chief Investment Officer at People's United Advisors, joining us on the phone from Bridgeport, Connecticut. John, thanks so much for taking the time. We're just 2 minutes away from the close of the markets on this last trading day of the month, and coming up next, it's Bloomberg Beyond the Bell. It's our cross-platform coverage of the market close with my colleagues from Bloomberg Television. This is Bloomberg Radio, Bloomberg Television, and if you're watching us on YouTube, you can catch it there as well. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
Right now, we are about 2 minutes away from the end of the trading day, the week, the month. Romaine Bostick, Caroline Hyde, counting you down to the closing bell. And here to help take us beyond that bell, our global simulcast team. Joining us right now, Tim Stenovic, a shortened team here, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the day. This is an intimate gathering, just 3 of us today. Normally it's 5, but Tim, I mean, what a way to end the week, the end the month here, because it is a relatively quiet day.
Yeah, I mean, sell in May and go away. I guess it certainly remains to be seen. A relatively quiet day, but if we look at what happened over the last 5 days, over the last week, green across the screen, the Dow higher by 1%, 1.22% for the S&P 500, and the NASDAQ, when it comes to these indices, higher by more than 2%, the clear winner just in the last 5 days, guys.
Yes, the S&P 500 actually really close to its record high right now, less than 30 points away from it. So they haven't actually sold in May, but maybe they're going away because volume's off by 12% on the day at the moment, Romaine.
Yeah, and I mean, this is a good point here because you talk about the trading range that we've been in, something around 4,056, just above that 4,200 level here. That's basically what the market's been camped out in. And look, a lot of it is really tied to those inflation expectations and I guess the Fed reaction to that. Until there's a little bit more clarity in the data, I think you could see us range bound for a little bit longer.
Yeah, look, and I think if there's one story that the bond market is telling us right now, at least this is what John Trainer, the Chief Investment Advisor at People's United Advisors, just told us on Bloomberg Radio. The bond market is saying that inflation is indeed transitory, and they're taking what the Fed is saying at face value.
Yeah, I love the bond market. By the way, the bond market today, that's called UNCH, as Tay would always tell us here. Your 30-year UNCH at 228. You're getting about 159 basis points if you're going to dive into a 10-year today. But let's dive into what we're seeing here in the equity markets here on the day. 4203 on the S&P 500. That's basically going to be UNCH on the day. It's up fractionally, about less than 0.1% here. Similar story for the NASDAQ Composite, 13,748. The Dow Jones Industrial Average look like it's going to finish the day right around 34,530. And just quickly on a monthly basis here, we're talking about a Dow that is managing to end up about 2%. The S&P also in the green, as is the Russell 2000. It looks like it's going to eke out about 0.1 percentage point gain on a monthly basis. The NASDAQ in the whole by about 1.5%.
Russell 2000 just managed to do it on the month. That means it's 8 straight months against the Russell 2000. We haven't seen that sort of winning streak remain since 1995. Meanwhile, I'm looking at what's happening on a breakdown from industry basis. Chips is where it's at today. On the S&P 500, up 1.5%. NVIDIA, thank you very much, at a record high, as you were telling us earlier, Romaine. So that's a company, of course, affected by the overall supply chain issues. You'll dig into it more in a moment. Bond proxies doing well as well. We saw yields just tick down a little bit. Real estate is up. Utilities are up as well. Software and services. I mean, we've got to call out the likes of Salesforce and their numbers doing well there. On the bottom, we're in the downside, off by 0.5%. Food, staples on the downside as we all get ready for our barbecues, our grills. Autos also on the downside as well. Banks giving up some of the gains of yesterday, Tim.
Yeah, we talk about here some of the gainers on the day. You mentioned NVIDIA at a record high. That's the close you're looking at there, 649 and change, up 5% on the day. Keep an eye on Zoom. Zoom Video is actually going to report earnings next week here. That's obviously a big pandemic play. We'll see whether that pandemic play turns into a post-pandemic play. Ulta Beauty had great earnings, up 5% here on the day. One analyst over at Evercore ISI calling it a mic drop type of quarter. And keep an eye on Well-Built. This isn't a company we talk about much, but this is a company that basically makes all of those kitchen appliances that you see in restaurants here. So the stoves, refrigerators, convection ovens, and well, looks like there's a little bit of a bidding war going on for this company here. Alley Holding coming in with a proposed bid for $23 a share. Remember, Middleby already had a bid in for this. Remember, this company backed by Carl Icahn icon. Those shares closing up above that bid at 24.71, up 24% on the day.
Yeah, Romain, you have the gainers, I have the decliners, and some interesting stories playing out on the downside today, starting with Boeing, the worst performer in the Dow today. Boeing finishing the day down just about 1.5%. It halted deliveries of its 787 Dreamliner, this coming just 2 months after restarting them as the company works to get regulatory approval for its plan to resolve those previously disclosed quality issues. Also watching Big Lots finishing the day down just about 5.6%. The closeout retailer falling after it forecasts that gross margin is going to shrink. This has to do with a result of those rising freight costs. It's getting more expensive to ship, and that's hitting the company. And a really interesting story playing out when it comes to PC makers. HP Inc. finishing the day down about 9%. Dell not performing as badly, but down just about 1%. The company's reported revenue and earnings. It showed that people and companies, Caroline, are continuing to buy PCs, but investors right now are concerned that that pandemic peak may have happened, Caroline.
Meanwhile, I look at also what's on the red, and for our global radio viewers, TV viewers, YouTube, I'm looking at what's happening in the world of FX right now, because actually it's a bit of a dollar strength kind of a story today. We have in general been talking about the weakness that we've seen in that particular currency, of course, the US dollar, but today it's on the upside. We're seeing some of the commodity-related currencies on the downside versus the Kiwi, the New Zealand dollar off by 0.6%, Aussie dollar off by 0.5% as well, Swiss franc too. So we do see some perhaps giving back of the gains of the commodity run that we've seen. Steel, though, when I look at commodities, up 3%, nat gas doing well. Also, oil having its best month since April. Of course, as we head into the driving season in the United States, we did see a bit of a bid over the course of the month for the likes of oil. Iron ore up 2.2%. Now, iron ore had, of course, been on the downside. China managing to push back against some of the rallying commodities. We just see a pop back up in that particular commodity. And when I'm looking at bonds across the board, a mixed picture. But I know it yields down slightly today, Tim, when we see the US bond market.
Yeah, well, let's head back to the equity market and talk a little bit about the end of the month when it comes to equities. The big three indices finishing the month, the Dow finishing the month higher by 1.93%. The S&P 500 higher by 0.5 percentage point. This is the fourth month in a row that the S&P 500 has rallied. And the NASDAQ finishing the month in the red, down remain by 1.53%.
Yeah, I mean, look, any person out there who has a Bloomberg terminal, just run RRG on your terminal and you'll see what happened here over the past month. This wasn't cash coming out of the market. This was a rotation. So you saw it out of some of those growth names into, I guess, what is quote-unquote value, at least into some of those cyclical names here. You talk about 41.81. That was basically where we were to end last month, to end April. And this is basically where we are right now, 4,200 and change, 4,204 to be exact here. So this is a market that has effectively gone nowhere. It's sort of oscillated around basically money looking for a home. And that seems to be what a lot of the people we've been talking to, guys, on this program and on our other programs seem to be saying, that people are looking to stay invested. They're buying into the longer term economic outlook here. It's just, they're just not necessarily in agreement, I guess, on where specifically within the market they want to stay.
Yeah, because for every sort of investor we speak to about whether there's room to run still in big techs, for one that will say, no, get into cyclicals, there will be someone out there saying, look, growth, you still can't fight against it. Big tech is where it's been. And interesting that we saw today, NVIDIA really lead the charge, big chip makers, but also notably, you know, I'm looking at a chart now for our radio viewers of small caps kind of rolling over in terms of underperformance. The Russell 2000 has actually done pretty darn well on the week, up 2.8%, but not as well as some of the other major benchmarks. It's interesting that small caps perhaps underperformed, Tim, when we've seen such stellar performance from certain meme stocks. AMC has up 1,300% on the year. I mean, it's down on the day, but what a run. It's doubled this week alone.
Yeah, I mean, just today it was as high as 38% at one point in the day, but if you blinked, you missed the decline. I mean, this thing, it was all over the place. Hey, I want to get to some news that you guys broke just a little earlier about Rivian, the electric automaker. Yeah. It is potentially seeking an IPO that could value it as high as $70 billion when it goes public. Just a staggering amount of money. Have you seen these trucks and SUVs? Yeah. They are really cool, and they are zippy, of course. And this is Amazon backed, by the way. And there's a great video of Jeff Bezos really going fast in the Texas desert out to retrieve one of his test rockets, and it looks like he is having a fun time going fast in this.
Well, this is, I think I find this interesting because you remember, you know, I don't know, you go back 2-3 years ago. I mean, the only real discussion you could have about EVs was pretty much Tesla, and now you got these smaller companies like Rivian and Lordstown, but then of course now you got GM Ford also in the mix.
Notable that they're not using a SPAC either, actually going through the initial public offering process, getting banks to underwrite it, of course, and Goldman, JP Morgan going to be taking a chip out of that. But 70 billion is one phenomenal market capitalization overall, so we'll see how the CEO continues to steer that. Notable that actually we had a little bit of a bounce back in the SPAC part of the market. Some of the more
SPACs are back?
riskier parts
Is
of the
that what
market.
you're telling me?
SPACs, I'm not going to call them back, but they certainly just bounced off their lows.
Oh, wonderful. All
Yeah,
right.
SPACs
I'll take all my profits out of AMC and put them into SPACs.
SPACs are back, but I'm going to try not to think about them for the next 3 days as I'm trying to grill out in the rain here in the tri-state area happening this weekend for Memorial Day weekend. I might be thinking a little bit about inflation, though. There's a great chart in the Bloomberg that shows the prices of ground beef, American cheese, ice cream, tomatoes, chips, and white bread. 2 levels not seen in just a few years. I'm not necessarily, Caroline, eating those things this weekend.
Are you a faux meat kind of a guy, Tim?
Yeah,
Are you more of a
I'm
whole
about the
grain,
beyond and
kind
impossible.
of a brown bread?
Yeah, we're a bunch of East Coast elites over here. So, I mean, look, you know, I love this index. I guess this is the heart of America here, right? Ground beef, white bread, American cheese. I don't see the faux meat in this index. I don't see the whole grain bread. I don't see, I don't know, beer, wine.
Yes,
those
White
things.
Claw.
I mean, who's
Where's
having a
that?
Memorial Day party without alcohol? Am I the only one?
Yeah, we're gonna have to look.
You're
we're gonna have
no
to look
Gen
at
Z, Romaine.
the beer and wine index. Okay, I'm gonna look for that in the terminal. Hey, you guys have a great holiday weekend. That's gonna do it for our
Find Carol. Bring her
cross-platform
back.
coverage
Is she
today.
around? Is
We're
she
gonna
okay?
do it again next week, same time, same place, right here on Bloomberg Radio, Bloomberg Television, and YouTube. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Well, there you have it. The end of May. The trading month is done. The Dow finishing the day higher by just about 0.2%. The S&P 500 higher by just 0.8%, or 0.8 excuse me. And the Nasdaq about 0.1%. This is Bloomberg. Let's get a check on weather. Let's get a check on world and national news with Nancy Lyons in D.C. Hey, Nance.
To start the Memorial Day weekend, President Biden today went to a military base in Norfolk, Virginia, to laud the troops who have served in the nation's wars, most recently Iraq and Afghanistan.
The president said in the last 20 years he's visited every part of Afghanistan, meeting troops who've deployed even 4 and 5 times.
Year after year, deployment after deployment, American troops pursued the terrorist threat through some of the most unforgiving terrain on the planet. No other war have you gone in, served, got back up again, and go back again and again and again.
The president said the terrorist threat will still need to be monitored from outside Afghanistan, and it's made its way to 5 more regions of the world. In Washington, Irv Chapman, Bloomberg Radio.
President Biden is out with his $6 trillion budget that, if approved, would take the U.S. to its highest sustained levels of federal spending since World War II. To pay for his plans on infrastructure and safety net programs, he would seek tax hikes on the wealthy and corporations. Deputy Director of the Council on Economic Advisors, Bharat Ramamurthy, tells Bloomberg those tax increases are reasonable.
In 2018, the effective tax rate paid by U.S. multinational corporations was 8%. And compare that to the tax rate that small businesses pay, compare that to the tax rate that your average middle-class family pays. There's clearly capacity for these companies to pay more in taxes to help finance the investments that, by the way, are going to be good for those companies in the long run.
Ramamurthy says the tax hikes will not stifle growth. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thanks so much for that, Nancy. Well, our Business Week weekend show features our interview with IMAX CEO Richard Gelfond. In this excerpt, Gelfond explains why it's so difficult to reopen movie theaters globally. Check it out.
Probably being more honest than I should be, this has been one of the most frustrating periods of the pandemic for me. And that's because I think the world is really ready to go back to the movies. And I think there are a lot of movies that are ready to go. But I think not every territory in the world is ready at the same time and the same pace. And the traditional distribution model would say you open up globally at one time all over the world. But, you know, guess what? this just isn't the time where that works. So this time has called for different kinds of models. And as a result, the studios, who mostly were located in Hollywood, were looking out their windows and saying, the pandemic is really not doing well here, ignoring the fact that, there have been blockbusters in Japan and China and Korea and Taiwan for months. So I think kind of we've been ready in a lot of places, but the movies just haven't been there. And one of the things that was really unique about the release of F9 was it was released in China about 5 weeks before it's being released in the rest of the world, which is a different model. And I think most of the studios have played it really conservative and said, we're not opening anywhere until we could open everywhere. But fortunately, Universal, took a risk in doing this, and it opens in the U.S. in late June. But it really worked. And I think you need to demonstrate that people want to go back to the movies.
That was IMAX CEO Richard Gelfond. It's in our Business Week weekend show. Features that interview, among others. You can hear more of that interview in our weekend show on Bloomberg Radio and on our podcast feed. It's available at Bloomberg.com. Gelfond making the case that people are ready to go back to movies. He's seen it in China, and he expects to see it around the world. This is Bloomberg Radio, and this is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Day fades, specifically final 15 minutes of trading, but it was an update with the Dow, the S&P, NASDAQ all advancing. S&P notching their fourth straight monthly advance as data signal prospects for a sustained rebound of the U.S. economy outweigh inflation worries. S&P, by the way, ending the week and the month near a record. This week, the S&P 500 index up 1.2% on the month. S&P was up by 0.5%. Closing numbers, S&P up 3, a gain of about 0.1%. The Dow up 64 points, up today by 0.2%. NASDAQ higher by 12, up 0.1%. 10-year yield 1.59%. 10-year up 3/30 seconds. Gold up 0.4%. 19.03 the ounce. And West Texas Intermediate crude lower today by 0.3%. 66.63 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that, Charlie Pellet. Well, this Memorial Day weekend, more than 37 million people are expected to travel, this according to AAA. This would be an increase of 60% from last year, when only 23 million traveled. That was the lowest on record since AAA began recording all the way back in the year 2000. Many of them, of course, will be staying in hotels, and in some of those hotels, they may find themselves using Inseo technology. Inseo is one of the largest hotel tech companies in the world, and it works with nearly 2,000 Marriott and Hilton brands to implement touchless technology. Joining us now is Vanessa Ogle, Chief Executive Officer of Inseo. She joins us on the phone from Texas. Vanessa, how are you doing today? Thanks for taking the time.
I'm well. Good afternoon, Tim.
Good afternoon. So for people who may not be familiar with Inseo, how have they may have interacted with it in hotels?
Well, if anyone has watched Netflix in a hotel room, then they've probably used Inseo.
This is the technology that allows you to log into your own Netflix account while you're traveling?
That's right. So you can use your favorite content that you bring with you into your hotel room when you're in some of the best brands of the world.
What about when it comes to contactless technology and the way that we're increasingly seeing hotels invest in touchless, contactless, and automation for rooms?
You know, we're seeing an increased investment in these technologies that you mentioned, Tim, whether it's touchless, contactless, or room automation in ways that we have never seen before. It's really accelerated this area. So this means that when you go to the front desk, you could have a virtual front desk agent like our product Vera, or you could walk into your room, be able to use your phone as your room card key, not even having to touch that door, walk into that room, continue using your phone as the remote for the television to turn on the lights, to adjust the temperature of your room, and to check and order room service. So really being able to use the devices that you trust the most to control your entire stay.
What has the last 14 months been like for you, Vanessa, as hotels? I mean, look, it's a question that's it's really loaded, right? How has the last 14 months been for any of us? But what have they been like for you? I mean, take us through what it was like at Inseo.
That is a big question. Certainly, March of 2020 was devastating to us. As a small minority woman-owned business that was dependent on the hospitality and travel segment, we saw our entire business come to a screeching halt. And our customers who were hoteliers, even though the name of the brand on the door may be a beautiful big company like Marriott, the reality is the owners of those hotels are small business people just like me. And so they all saw their business kind of grind to a screeching halt. I had to do very difficult things with my team, layoffs and furloughs and things like that. Then we did get the PPP loan, so we got to be able to bring all of our people back to work. And we immediately went into overdrive creatively in creating what you just talked about earlier, which is all these touchless technologies, so that we could accelerate the opportunity for guests to feel comfortable and for associates to feel comfortable in their hotel rooms.
Well, look, that brings me to my next question, which is, did hotels use it as an opportunity to implement this technology that they would be able to then tell potential customers, hey, we have this, so you should feel more safe, you should feel comfortable?
We did see that happen. I think, early on, the hotels were vying for those very few brave people who were still out there on the road. And then I think what's happening now is we absolutely see travel at an all-time high since March of 2020. And those hoteliers are absolutely investing in this technology so that they can make as many people feel as safe as they can and to offer as much safety as possible to those travelers and their own associates.
What are you hearing from hotels right now? And I would imagine that you have, does your technology allow you to get the granular data that shows when people are using it?
We do. We get a lot of data. We don't know who's using it, of course.
Right.
There's a lot of privacy. But we do know, is the room turned on? Are they watching television? Are they listening to their Bluetooth music on the television? Are they changing the thermostat with our system? Are they using our touchless remote connect? So we have a lot of data on what's happening when the rooms are activated as it relates to the technology being used.
So what's that telling you about occupancy right now?
Occupancy is at an all-time high since March of 2020. And it's very exciting to see the uptick that's happened really quite steadily. Originally, we saw some leisure travel start to pick up a little bit. Then now we actually have some midweek travel picking up now. And so this is really, this holiday weekend is a wonderful confluence of all of those things together where you have the weekend travel and holiday travel all coming back. And the occupancy is very, very strong across all segments.
There's been this debate about business travel and the return to business travel after 14 months spent using Zoom and conference call technology. If it ever does fully recover, do you think it will?
We do see business travel returning. Will it ever be the same as it was before? I don't know. But we're seeing different kinds of business travel because we're seeing people do these, workcations where instead of going into a regular office, they go into a hotel room. And so now they're working, quote unquote, from home, but their from home may actually be from your local hotel room because it has all the amenities and it's quiet. So it's a new type of business travel.
So meaning that people are traveling to destinations and they're taking a vacation, but also working because you can work from anywhere, and we only have about 15 seconds left.
That's exactly what they're doing, both at home and on the road.
Okay, and very briefly, when do you expect hotel occupancy to be back to pre-pandemic levels?
We see that by the end of the year this year, there's the possibility that hotel travel is back to pre-pandemic levels.
All right, well, there you have it. Vanessa Ogle is Chief Executive Officer of Enseo. She joins us on the phone from Texas. Enseo is one of the largest hotel tech companies in the world. It works with 1,900 Marriott and Hilton brands to implement touchless technology. Vanessa, thanks so much for taking the time. In just a few minutes, we are going to be talking all about wine on this last Friday of the month. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenivek in the Bloomberg Interactive Broker Studio in New York City. Just after 4:30 on the last Friday of May. And just before this holiday weekend, as good a time as any to talk wine. And we are going to do that in just a minute with David Duncan, CEO at Silver Oak Winery. But in the meantime, let's get a check of how the trading day wrapped up with Charlie Pellet. Hey, Charlie.
Hello there, and we've wrapped up the trading month of May. Turned out to be a winning week, winning month. S&P this week up 1.2%. S&P this month up 0.5%. And it is on to the trading month of June. Stocks notched their fourth straight monthly advances. Data signaling prospects for a sustained rebound of the U.S. economy outweighed those inflation fears. As for what's driving the market, John Traynor is Chief Investment Officer at People's United Advisors. He was our guest right here on Bloomberg Business Week.
You know, what we're seeing is just a continuation of the themes that we've seen all through this year, sort of the give and take, the ebb and flow between growth and value. You know, is the economy going to be too hot, or is it going to be, a more moderate growth?
As for the market backdrop, Sarah Malik is Global Equity Chief Investment Officer at Nuveen. She was interviewed this morning on Bloomberg Television and Radio.
The market's really dealing with three key issues here, and that is higher inflation, taper talk, and peak earnings growth. And that's what we're looking at for the second half of this year. We're in the inflation camp, that it's transitory based on the reopening, supply chain issues, and the shift from goods to services. And once we're through all of that, we think inflation will settle down later this year.
The S&P 500 ending the week near a record. Russell 2000, though, did have a down day today, down 0.2%. However, the Russell 2000 capped its 8th consecutive month of gains. 10-year yield 1.59%, right to the equity numbers. A little changed higher, though. Really a late-day fade that happened in the final 15 minutes of trading. S&P ended with a gain of 3, up by about 0.1%. The Dow up 64, higher by about 0.2%. NASDAQ higher today by 12. That was a gain for NASDAQ of just about 0.1%. Gold up 0.4. West Texas Intermediate crude down 0.3, 66.62 a barrel. Some of the meme stocks, those recent high flyers, turned out to be a down day for AMC. Wild swings there. AMC ended the session with a loss of 1.5%. GameStop heading into the weekend. GameStop shares down 12.6%. I'm Charlie Pellet. That is Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, it is Friday, just before 5 p.m. Wall Street time, just before that holiday weekend. So I think it's as good a time as any to be talking about wine. And joining us now to help us do that is David Duncan, CEO of Silver Oak Winery. He joins us on the phone from Napa Valley, California. David, how are things out there in Napa right now?
Good afternoon, Tim. Everything is really nice. We're having a wonderful spring, and it's dry. We're definitely in a dry cycle again, but it's beautiful in Napa.
Yeah, it's always beautiful in California. I can say that as a Californian. And we're going to talk about environment and drought and dryness in a few minutes, but I want to start just by hearing about what the last 14 months have been like for you at Silver Oak Winery, and specifically how Americans drank wine in your wine during the pandemic.
Yeah, it's been really a fascinating, exercise, if you will, from a production standpoint, and being a vintner and making wine. It's all been pretty much normal. We've been growing grapes and making wine, and our teams, we're keeping all of our employees safe and doing everything that we can to deal with the pandemic. From a consumer standpoint, it's been just an amazing change. We focus on selling our wines in restaurants, and as our restaurant partners across the country and really around the world were forced to close, we were worried, frankly, and we found that the consumers, found other ways to purchase wine. And so working with, fine wine shops and all the way the states opened up to allow wine shipping really allowed us to shift our focus and provide, the wines into people's glasses where they were. And I think as the restaurants come back, we're going we're really gonna see the demand shift again. So
can you talk about those? Yeah,
talk
about the regulatory changes here, because I have this memory of I grew up on the Central Coast of California, wine country, on the Central Coast wine country, and I have this memory of going to UPS with a case of wine and trying to ship it to a friend of mine in Maine, and this was 15, 17 years ago, and that they told me I couldn't do that. And I didn't understand why at the time. Take me into the regulatory changes over the last year that has allowed you to ship wine.
Well, 10, 12 years ago, we were only allowed to ship wine into 13 states directly. And that really has to do with the repeal of prohibition, back in the 30s, and how it was given to state control. So each state has its own, distribution model. Some states are state controlled. Most states are, you have to sell through a distributor. They call it the 3-tier system. So it's producer to distributor to either retailer or restaurant. And so there was a perception really that if you cut out the distributor, they wouldn't make money. And so the, distribution would be fighting for their share. But I think what really happens is what I call the buying occasion. So, you're probably familiar with different wines that you enjoy, and if you can find them at your fine wine shop, for say $50 a bottle, but at a restaurant that same bottle is $75 a bottle, you're willing to pay that, because it's like buying a steak at the grocery store and grilling it yourself versus having the same steak on the menu and prepared and brought out on a clean white plate. So I think there's so that's basically. And the producers and really helped to promote the idea, and the states responded that the consumers were there, and with restaurants closed, we needed to be able to sell our product. And so many states, I think we can ship to 45 states now. So it's changed pretty dramatically, and it'll be interesting to see how that model continues to evolve as we come back out of the pandemic.
David, is that a permanent shift? Is that the regulatory?
I think that's the question.
Yeah, because so much, at least, there's so many temporary things that happened during the pandemic, but just in the last 45 seconds that we have, and then we're going to come back with you and talk more. Is that a permanent shift? Do we know?
Yeah, I don't think we know that yet. I think there's definitely a call for that, and I think the consumer enjoys it. I think we've proved that we're not shipping wine to minors, especially ultra premium wines, and which has always been an argument. And so, yeah, I think the landscape has permanently changed. I think some of it will regress, but I think for the most part, we're going to remain in this type of model going forward.
David Duncan, sit tight, because we're going to do some news and then come back with a few more minutes from David Duncan, Chief Executive Officer at Silver Oak Winery, joins us from Napa Valley, California. You can follow Silver Oak on Twitter at Silver Oak. Look forward to talking about green and environmental elements to producing wine, especially in a time where California is going through another dry spell. In the meantime, let's get a check of the latest world of national news with Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Hey, Tim. Senate Majority Leader Chuck Schumer is not hiding his outrage over Republicans blocking an independent review of the January 6th riot at the U.S. Capitol.
Shame on the Republican Party for trying to sweep the horrors of that day under the rug because they're afraid of Donald Trump.
Schumer says Republicans appear afraid that the big lie around the election would be dispelled. Republicans accuse the Democrats of wanting the commission as a political weapon. President Biden is releasing his $6 trillion budget that spends more at home and would make corporations and the wealthy pay more in taxes. Biden tells Congress in a letter that it would fix the tax code and reward work instead of wealth. Infrastructure negotiations will continue past the long Memorial Day weekend into the coming week.
President Biden had hoped to come to a bipartisan agreement before the end of this week, but the Republicans' most recent counteroffer is still more than $1 trillion short of the president's plan. Senate Minority Leader Mitch McConnell had indicated the GOP could still go a little higher. President Biden will meet with Republicans next week to continue the talks, but warns the window for a deal will close soon. Republicans argue their proposal would still be the largest physical infrastructure bill ever enacted. In Washington, I'm Amy Morris, Bloomberg Radio.
Samuel E. Wright has died. You may not know the name, but you likely know his voice.
Under the sea,
That's Wright voicing Sebastian the Crab in Disney's Little Mermaid. Wright's family says he died earlier this week after a 3-year bout with prostate cancer. He was 74. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thanks so much for that, Nancy Lyons. Tim Stenovec in the Bloomberg Interactive Brokers studio. This is Bloomberg Business Week. Our Business Week weekend show features our interview with Hank Watkins, president of the Americas region of Lloyd's of London. In this excerpt, Watkins discusses how the pandemic has impacted the insurance industry. Check it out.
For the insurance industry, which is, I think, the focus of the conversation today, we've gotten through it pretty well, but there still will, when this is all said and done, be more than $100 billion in claims paid by the global insurance and reinsurance industry. You think of events that were canceled or postponed, Wimbledon, the Olympics, all around the world, just as major events there. So,
what was the biggest claim component, if there's a pie in terms of claims being paid out? Was it sports and events? What was it the biggest component that was ultimately paid out because of the pandemic?
I'll speak from Lloyd's perspective only. Sure. Since we do insure a lot of events globally, event cancellation was probably 40% globally of the impact on us.
Yeah.
Oh, absolutely. Yes.
Who would have thunk, right? A pandemic. It's like one of those black swan events, it feels like. But does it change your thinking about policy coverage or clients? Are they changing their thinking about what kind of insurance they have? God forbid we get another pandemic.
There were actually products available for several years. So, I mean, Lloyd's issued a paper about 10 years ago exploring the risk of a major pandemic. And it was issued and read by some people, I suppose. But then ultimately there were some policies put out there in the marketplace by a few major firms. And there was no take-up because people, especially when, post-financial crisis, people are struggling to get back on their feet. Businesses aren't thinking about every possible systemic issue out there. Right. They need to cover what it takes to run their business. So that's the way human nature is, though, right? We spend money on insuring our cell phones, yet we don't necessarily take care of our lives or other things as we might.
That was Hank Watkins, president of the Americas region of Lloyd's of London, talking about how the pandemic has affected the insurance industry. You can hear more of that interview in our weekend show on Bloomberg Radio and in our podcast feed at Bloomberg.com. You're listening to Bloomberg Business Week, and this is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pelleton. Up Friday, winning week, winning month for the U.S. stock market. In fact, stocks notched their fourth straight monthly advances. Data signaling prospects for a sustained rebound of the U.S. economy outweighed inflation worries. S&P ending the week close to a record. Russell 2000 of small caps capped its 8th consecutive month of gains. Today, the Russell 2000 index down 0.2%. S&P up 3. A late day fade, really in the final 15 minutes of trading. S&P up 0.1%. The Dow up 64, up 0.2. NASDAQ up 12, a gain of 0.1%. 10-year yield 1.59%. Gold up 0.4, 1903 the ounce. West Texas Intermediate crude down 0.3%, 66.64 a barrel. Southwest Airlines says it will delay serving alcohol again on flights after an increase in incidents of unruly passengers. The airline was planning to resume selling alcohol next month on Hawaii flights and in July on other flights. Southwest today down by 0.4%. I'm Charlie Pellet. That's Bloomberg Business Flash.
All right, thanks so much, Charlie. Let's get right back to it with David Duncan, who's CEO at Silver Oak Winery, joining us now on the phone from Napa Valley, California. David's CEO of 4 wineries and also a board member at the Napa Valley Vintners. David, it's great to have you back with us. I want to start by just talking about the physical environment where you are and just what is happening in California and what has been happening throughout my entire lifetime. I mean, I grew up there, and it felt like we were always in a drought, and this year seems to be no exception. And I'm wondering how you adjust to that as a winemaker.
Well, I mean, it's a complicated issue, and what's interesting is that in 2 of the last five winters, we've had absolute record rains, and our typical rainfall in the Napa Valley is around 33 inches, and we had upwards of 60 inches, in 2 of those winters, and what that creates is a lot of growth in the forests, and so and growth means fuel, and then one of the things that makes Napa and Sonoma such a special place to grow wine grapes is that we get these dry summers, which is important to the process of growing high quality grapes, and so it's really typical to be dry during the summer. But in this past winter, we only had about 11 or 12 inches of rain, so we're well less than half of normal rainfall, and so it's dry again. And I think there's many efforts. The Napa Valley Vintners are leading the way. I'm serving on the fire mitigation task force, and we're really working with the public, with the utilities, with CAL FIRE to try and understand and do what we can to help mitigate these fires. I think if you came and visited Napa Valley right now, I think you'd be hard pressed to really know what happened last year. Mm-hmm. There are places obviously that you drive up and you can really see a lot of damage, but in general, the vineyards are fine. The grapevines are fine. It's difficult on the people, and of course, we were very fortunate that virtually nobody lost their life last year, which of course is the main thing for us.
But it's not just fires, David. It's also irrigation and making sure you have the resources that you need to grow these grapes. How do you do it?
Yeah, I mean, a lot has changed in technology in grape growing in the last 15 years as we've developed tools to really measure what the grapevine needs. And so I know both from our production facilities, which we've rebuilt in the last 10 or 12 years, and in the vineyards, we're probably using, well, I know for a fact that in the vineyards we're using about a third of the water that we would have used 15 or 20 years ago and prior to that. And because we're able now to measure the uptake of water into the vine and know, we call it precision viticulture. So we really can pinpoint what the vine needs. And frankly, we were overwatering in the old days, and creating a lot of unnecessary canopy growth. And so a lot of that's changed. And, we feel very confident that in some of our vineyard properties, we even dry farm or maybe irrigate once or twice a year.
Wow.
And so, I think if this goes into a prolonged drought again and our aquifers get depleted, that will be a different problem. But I think for the 2021 vintage, we're in really good shape.
Do you think the industry faces, though, an existential threat from climate change?
Well, I have my answer to that question is generally that if we can't grow Cabernet in Napa Valley, we're going to have a lot bigger problems on our hands than that. So I think that there certainly is. It seems warmer, although I can tell you, I just got the data from our vineyard team yesterday that the average temperature in Napa Valley this spring was 10 degrees below the 33-year average. I mean, that is a remarkable thing. It was a cold spring, and we're seeing the vine growth kind of starting off slow. So I don't like to call it global warming. I call it climate change, and it may be actually too cool here, Wow. So I think it's a difficult problem. But, as a community, we're farmers, and farmers roll with the punches, and dealing with Mother Nature's, part of what we got to do and continue to carry on.
One thing that's
you look at what happened.
Yeah, go ahead.
Well, I was just going to point out, unfortunately, what happened in France this year was just catastrophic, and that was a freeze. It was two freezes. They had two major freezes in France, and has created absolute havoc for our brethren over there in Bordeaux and Burgundy and other regions of France.
Hey, David, one thing that I wanted to touch on that's unique about Silver Oak is that it's the only North American winery to own its own cooperage, a barrel-making facility. What does that provide you?
Well, the barrel is an important component in winemaking, and for Silver Oak in particular, we use 100% American oak barrels. And for some of our other wine brands, we use French oak. But for Silver Oak, we use American oak barrels. And by owning our own cooperage, we're able to ensure our wood supply. There's an aging process of the wood that actually goes into a barrel. We dry it for 2 years outside before we make it into a barrel. And then the quality aspects of our barrels from what we call the oak. It's called the oak cooperage. And if people are interested in that, there's a wonderful website with a lot of explanation, because there's making a barrel is like making a piece of furniture. There's a great deal that goes into it, and it's a pretty fascinating process.
I'm curious about trends that you're expecting within your customer base right now. How have American wine drinkers changed?
Well, I think what we're seeing really is, I'd say, a general maturation of taste, and so people understand value in wine and understand quality. And I think, everybody's always talking about the next generation. We are seeing definitely a trend towards younger people in our tasting rooms, more interest in wine. I just read an article about one of the top 3 things. I think it was a survey that was done, and one of the top 3 things of maturity was knowing about wine. And so, people are interested, and I think you see that across the spirits and wine drinking public, that they want to drink better quality wines and enjoy that moment and what comes with opening a bottle of wine, which is generally the conviviality and joy that a great bottle of wine and a meal brings with your friends and family.
All right, David, before we go, I'm going to have you pick your favorite child here. What's your favorite wine that you offer right now? We only have about 15 seconds.
Oh, boy. I don't know. Today is my mother's 90th birthday.
Oh.
So I think it's going to be a little warm this afternoon. I think we'll be drinking Sauvignon Blanc. But there's nothing that beats a great bottle of Alexander Valley Cab.
All right. Well, happy birthday to your mom, and a big thank you for taking the time and joining us on Bloomberg Business Week. It's David Duncan, CEO at Silver Oak Winery. He joins us from Napa Valley, California. Well, that's going to do it for Bloomberg Business Week on this last day of May. I hope everybody has a wonderful Memorial Day weekend. We're going to be back here on Tuesday, starting at 2 o'clock p.m. Wall Street time. This is Bloomberg.